Howdy there, partner.
I very much hope you are watching this video before Friday, May the 16th, because it's going to be a very pivotal trading day. In this video, I'll be breaking down what in the world happened in the market today, specifically why we had the afternoon sell-off. Then I'll be talking about why tomorrow is so incredibly important. And then I want to get into a little bit of a dark horse candidate for you, because there's one high-flying tech stock that is ripping to new all-time highs, and I don't see anyone talking about it. But before we get to all of that, if you enjoy these type of market breakdowns, don't forget to like, subscribe, and share it with a friend. And with that being said, let's get to the action. By the time the world's largest casino officially closed today, Thursday, May the 15th, here was the headline. S&P 500 closes higher for a fourth day. Dow jumps more than 250 points. Now, if you're looking at the heat map of the S&P 500, you're going to notice that it's inverted from what we've seen all week. All week, tech stocks were the high-flying green ones, while everything else was a bit weak, and today, a bit opposite. Tech took a bit of a hit, and I'm going to be explaining why, while everything else was decently green, except for this one deeply red stock, UNH, UnitedHealth Group, and of course, I'll be covering why. So, the overall market, we are still continuing a very nice rally. Since low, we were up 22%, and we're only a little bit off from the all-time high, just 3.75%, as in we are within spitting distance of a new record high. Quite the tune change from what people were saying only a month ago. Breaking it down, the SPY gaining 0.5%, the Nasdaq gaining 0.1%, UNH, that one very red healthcare stock, deeply red by 10%, adding on to a 40% drop off. Overall, this thing is now down roughly 50%. Coin getting hit, and we might as well get into why we have some unusual weakness, not only in UNH, but the overall tech sector. When we started the day off, we got this unfortunate news. UnitedHealth Group is under criminal investigation for possible Medicare fraud. Company stock has declined over financial performance and sudden replacement of CEO. Yes, this is why it was down not only 10% today, but down 50% from its recent high. Then from there, it didn't get much better. Coinbase hackers had access to customer data since January. Yes, it was reported that Coinbase is right now dealing with a hacker situation. Coinbase confirms user metric investigation, says it's working with Trump's SEC to resolve, and the whole story actually got a little bit more wild from there. Coinbase says hackers bribed staff to steal customer data and are demanding $20 million ransom. And then the CEO, Brian Armstrong, actually said they're now going to offer anyone else who can give information on the hackers that $20 million. As you might imagine, with that news all so early in the morning, we had a choppy opening, but then around 10:45, the overall market and the Nasdaq found its footing, and we had a really nice pop. And then that led to a little bit of an afternoon sell-off. So let's get into what was really happening there. You could see price was a bit better, options a bit shaky, and then around 1:30, that started to sell. This is for the S&P 500, and looking at the Mag 7, weakness until about 10:45, then a huge rip, and then the same thing. Around 1:30, things started to get a bit rocky. The reason things got rocky, the answer to that is actually twofold. So we got some unfortunate news related to Meta. Once again, this broke in the afternoon. Meta is delaying the rollout of its flagship AI model. The company struggled to improve the capabilities of the latest AI model, mirrors issues at some top AI companies. So basically, Meta, Zuckerberg said, hey, we got to pause behemoth right now. And as you might guess, the stock really didn't like it. If we switch over to Meta in the bottom right here, you can see things got pretty bad into the afternoon, but that wasn't the only thing going on in the tech sphere. We had an interesting roll. What I mean by that is sometimes you have to look at very large ETFs, QYLD, which has, I don't know, a nice $8 billion in assets under management. Well, this is a call writing ETF, as in they sell calls. As in they sell calls every month, and sometimes you have to look at where you are and realize that, tomorrow, Friday, is a monthly OPEX, and this was just their natural cycle to write, as in sell, a bunch of calls. And guess when they started to do it? Well, winner, chicken dinner, right at 2 p.m. Things were trending so nicely, and then once again, this giant ETF with $8 billion in assets under management per their prospectus, had to write the next batch of calls. And basically, they're doing covered calls against their underlying, but regardless, they have to write calls. And they started to do that at 2, and it looks like they were able to stop at around 3:30. It took them 90 minutes to do it. And when they finally stopped, well, guess what? That's exactly where the NASDAQ bottomed. And really, on the intraday basis, that's where the overall market started to bottom, and we started to see that pop. And in reality, the dramatic difference between SPY only taking a small hit while the NASDAQ took a serious hit, that shows that it was very specific to the NASDAQ and really specific to QYLD. And obviously, it didn't help with the Meta news, and it definitely didn't help with the Coinbase news. So in a nutshell, that's what went down today. We woke up to negative news from both UNH and Coinbase. UNH, UnitedHealth Group, is the US's largest health insurance provider. It is now down 50% from its recent high. Coinbase, obviously, it's never good to get hacked, so that was a hit to the overall tech sector, and I would argue actually the crypto sector. And then around 8:30, 8:45, we had some positive news related to both retail sales and the producer price index. And then a little bit after that, Jerome Powell, the chairman of the Fed, put some water on it. And if you want to see what he had to say, I would suggest checking out the stream on this channel from early this morning. And we got going once again around 8:20, 8:30 to capture all of that craziness. And then finally, when the market actually opened, there was a little bit of frothiness, and about an hour into the day, things settled down, it found its footing, and the overall market and the NASDAQ and a lot of our favorite equities started to pump. And then unfortunately, that kind of fell apart in the afternoon, where the NASDAQ, because of that big roll from the ETF QYLD, they had to do a lot of call selling. Well, that just drops the delta. The market took a hit, and it kind of stopped the SPY from going up. But I should note, it is very impressive that we were able to close the day out above 5,900, because that is a massive open interest level for the upcoming expiration. More importantly, that means we closed above this massive call node. Really, it's a call and a put node, giving us a shot at the next node right here, positive gamma node at 5,950, very much on my watch list for tomorrow. And then from there, in the event that we can push above that, hold above it, well, we have this massive negative gamma node all the way up at 6,000. So of course, this very much depends on what plays out in the overnight session, because you never know who's going to say what or who's going to do what. But my pitch is this: if we can hold 5,900, if and only if, then I'll be looking at 5,950. And then if and only if the market can push above that, that does open up the door for tomorrow all the way up to 6,000. Now, I know that's a very large prediction, and it's not even possible unless we see a slew of other things, but I am hopeful for it. Obviously, let's see how things play out in the morning. But I should also add this, a little note of warning. Tomorrow is a very large OPEX, a very large options expiration, and depending on the data source you use for the overall market, about 15 to 30% of all open interest is going to burn off tomorrow. And here's the issue, is a lot of that open interest is call dominated, as in if those players choose to not roll their position, if they just take their money and run and go into the weekend, we're going to be losing a lot of bullishness. We're going to be losing a lot of support. A lot of this positive call gamma you see on the bottom, it might not be there come Monday. So this might get into a period of a reasonable pullback, might be a little bearish, or it might just be sideways choppy. But right now, this overall sentiment that we see carrying us higher has a lot to do with the options market. And my biggest fear, at least as the point of filming this video, is depending on what those traders do, that might disappear come next trading week. So please be careful for that. But obviously, I don't want to raid on anyone's parade. Yes, everything is trending nicely, higher highs and higher lows. But remember, at a certain point, trends stop. So let's just be a little bit mindful. And it might be one of those periods where we start to focus on individual equities instead of the overall market. And there's one equity I would very much like to put on everyone's radar, and it goes by the ticker symbol NFLX. And this monster, a company we all know about, has non-stop ripping. I mean, look at this thing. Year to date, Netflix is up 31%. And just to be fair, the overall market, as of right now, is simply break even. In all this craziness of the sell-off from really late February up into early April, look at Netflix, really kind of untouched. I mean, it just went back to where it started off the year. And then since then, ripping. Year to date, up 31%, clocking in a new all-time high. And I get it. I know we all know about it. But in the trading world, it feels like not many people are talking about it. And I just wanted to take a second to more thoroughly break down why I'm so excited about it. Not just because it hit a new all-time high, but according to the option setup, if you follow what's going on in the gamma, it really doesn't actually go from positive to negative until we're above 1,225, right around 1,230, and it's currently trading at 1,180, as in this thing not only has a $20 runway, but potentially a $40 runway from right here, once again, according to the current option setup. So like I said, hey, obviously it's your account, trade how you see fit, but for me, this one is definitely interesting, at least worth a spot on your watch list. And the final thing I want to leave with you right now is JP Morgan Chase CEO Jamie Dimon says recession is still on the table for the US. And I wanted to bring this up to get your thoughts. Do you think there's still a legit shot we're going into a recession, or after the recent inflation numbers and the recent pump in the market, do you think we're pretty much out of the woods? I would truly love to hear from all of you in a comment below. That's what I have for you today. I'll see you tomorrow morning, 9 a.m. bright and early, to not only have a payday Friday, but to also see what in the heck is going down with this OPEX. I'll catch you then.